there's an expansion of liquidity. And so I'm watching that expansion of liquidity, and it's continuing. I think it's going to continue into next year. You heard Powell say they're stopping QT. That means that at some point in the near future, that is going to flip to QE at some point. We don't know when, but I believe that we're just going to continue to see expansion of liquidity into next year. So that means to me that gold can still, it's not done yet, in my opinion, and it can still rise. And whether it gets to 5,000 or just around there, I mean, that would not surprise me at all. As far as Bitcoin's concerned, I fully expect Bitcoin to run to 150 to 180,000 toward the end of this year and into the beginning of next year, and probably into the 200 range.
October was rough. Bitcoin's momentum cooled, traders panicked, and headlines declared the rally over. But that's exactly why November could be so critical. Beneath the noise, the setup for the next big move is already forming. Liquidity is quietly flowing back into the system, visible in charts, market tone, and the softening language of central bankers. Quantitative tightening is yesterday's story. James Lavish isn't predicting a miracle, he's reading the signs. When Powell pauses QT, it's not just a pause, it's the start of a pivot. History shows the same pattern. Tightening, pause, panic, then the surge of new liquidity. And when that wave hits, assets don't rise slowly, they explode. Gold is already showing quiet strength, but Bitcoin looks ready to spring. Lavish expects it could hit $150,000, even $200,000 once the liquidity floodgates open. The key point: markets always move before the headlines confirm the story. By the time Wall Street admits the pivot, the rally may already be halfway done. That October dip wasn't the end, it was the setup. The pressure building beneath the surface could ignite a massive breakout, and those who see it early aren't selling, they're getting positioned.
Hey, I am Maria with DailyDoseCrypto. Have you noticed that gold, silver, and Bitcoin have hit all-time highs recently? Is this a coincidence, or are smart investors onto something? The dollar is depreciating, inflation is eating up all of our cash, and the US national debt is through the roof, hitting new highs every day. That's why people are shifting to alternative assets like gold, silver, and Bitcoin. We at DailyDoseCrypto have partnered with ITrust Capital, your one-stop platform to buy and securely store 80+ digital assets, including Bitcoin, gold, and silver to hedge your future against debasement. With over 200,000 accounts, 15 billion in transactions, and 11,000 plus positive reviews, they're helping real investors build long-term wealth with their tax advantage, IRA, and PCA, which is a premium custody account that supports the highest level of custody and security in the space. They do this all with institutional-grade custody through partners like Fidelity Digital, Fireblocks, and Coinbase Prime, keeping your assets secure while you can trade 24/7. Fees are just 1% per transactions with no monthly or annual costs. Getting started is simple. Sign up for free and fund an IRA or PCA today. You'll receive a $100 bonus and start growing your assets the smart way. Click the link below to open your account now and begin your journey toward generational wealth.
Full disclosure, I own way more Bitcoin as a percentage of my portfolio and my assets. I manage a portfolio of Bitcoin assets for my hedge fund. But look, gold and Bitcoin in the same sentence makes sense. And gold bugs should be pro Bitcoin and vice versa. Bitcoin to me is better. It's the ultimate asset. And it's ultimate because we're entering into a digital age. But why is Bitcoin trustworthy, and why should you have it in your portfolio? Well, first, it has absolute scarcity. Gold's the amount of gold moves up and down with the price. As price goes up, gold miners they just ramp up productivity, and so there's a limit there. I'm not going to diminish that, but it's just not the same. Gold is just going to continue to come out of the ground for the foreseeable future. We don't know how much. With Bitcoin, there's 21 million Bitcoin that are ever going to be made. Full stop. That's it. Period. That in 2035, there's going to be one left to mine. I mean, it's mind-boggling how there's no longer going to be full Bitcoin mined. So it's also portable and it's divisible. So try moving $1 billion of gold across the border. Nothing wrong with it, but you'd have to think about the logistics and costs required to between security guards and trucks and boats and trains and planes or whatever you need to move all that gold to wherever it's got to be. With a Bitcoin, if you want to move $1 billion of Bitcoin, I could do it right now. If I had $1 billion, I could do it on the show in 10 minutes. By the time we're done, it would be done within 10 minutes and cost you just a few bucks. Bitcoin's unseizable. If you hold your own keys, then you can walk across any border and move anywhere around the world. As long as you have an internet connection, you have access to your Bitcoin. It can't just be seized at a border like gold or cash can. There's something called the network effect, Michelle, that most gold people don't understand and appreciate. And I didn't certainly appreciate it and understand it when I first got into Bitcoin. But Bitcoin, it uses the equivalent of 81 terawatt hours of energy, which is per year, which is the equivalent of over 20 full-scale nuclear reactors. That secures the network. That is what's securing the network of Bitcoin. So it's impenetrable. It's a fortress that it's nation state resistant. No state could just come in and say they want to change the code. It just can't happen. So they would be kicked off the network before they even got anywhere. Look, gold is time tested. It's institutional grade. Institutions have owned it and bought it. Central banks have owned and bought it for many years. It's bank approved, central bank approved, and it's really easy to understand. But Bitcoin is quickly gaining traction in Wall Street as a viable asset and collateral. And so that's something that we've seen that is developing real time. So now you've got JP Morgan, the same bank who is saying you've got to get in the debasement trade. They're putting together their structure so that by year end, if you're an institution, you're going to be able to borrow against your Bitcoin that you have with them. This is a massive, massive development that people are not talking about. It has to do with changes of legislation that occurred when Trump came in, that banks are no longer being sanctioned for dealing with crypto and Bitcoin companies. But now that you can take your Bitcoin and you can borrow against it in an institution, that this is where the institutionalization of Bitcoin is happening real time right in front of us. And so if you're somebody who owns gold, you really want to own some Bitcoin too. If I'm 100% wrong and you own a couple percent of Bitcoin, you're never going to miss it. But if I'm right, you're going to thank me because your portfolio is going to do far better than if you didn't have it. If you look past the past few months, you would say that gold is nowhere near as volatile as Bitcoin. In fact, the volatility of Bitcoin has been lower than gold recently, which is just incredible. But over the course of time, very few periods in the history of Bitcoin, the life of Bitcoin, has gold been more volatile than Bitcoin. So one of the reasons you might want to hold gold is that if you have short-term needs that you want to keep your money invested in more than just a 4% yielding treasury, that you want to be able to get to it without the volatility of Bitcoin. Bitcoin's volatility may mean that you could see a 10, 20, 30% move in your asset in a very short period of time. But I can't make the case of gold over Bitcoin over a long period of time. So if you're older and you're retired and you want to be very careful with your money, and you just can't stand the volatility right now because you have short-term needs, it may not be right for you. It really depends on the individual. But if you're young and you've got a long timeline ahead of you, you've got a long runway ahead of you of investing, there's no reason for you to be, in my opinion, selling Bitcoin to have gold. But it's if you start getting worried about quantum computing, own both. I don't think there's anything wrong with that. Like I said, I personally own a whole lot more than Bitcoin, more Bitcoin than gold, but I've owned them both for I've owned gold for many years, and once I learned about Bitcoin, once I really truly understood it, it changed my view of where this world is going. One of the reasons you may want to own Bitcoin too is that you understand that the digitization of the whole economy, of AI and the onset of AI, is there's going to be a need for layers of payments that are on what are known as the blockchains, and Bitcoin is the most trustworthy of all of them. And there's a lot of different transactions that are being built on the second layer of Bitcoin, and that is another reason to own Bitcoin, because that network is just going to continue to grow and get stronger and stronger in the future. And as it does, then the price of Bitcoin, each Bitcoin, will just go up, and eventually it'll be $1 million per coin, and then $10 million per coin, and who knows from there. But that's my very strong opinion. I've been studying this stuff for a long time, and I'm extremely confident in the future of Bitcoin itself. So
October shook the market, but that dip was a trap. Liquidity is surging back as the Fed's repo facility hits $50 billion, signaling the end of quantitative tightening. Powell's pause says it all. The money is coming. Gold remains the steady, traditional asset, but Bitcoin is the rocket, unseizable, digital, and infinitely scalable. Wall Street is waking up. Whales are accumulating between $100,000 and $117,000, and ETFs just recorded $90 million in inflows in a single day. That October flush shook out weak hands, leaving the market primed for liftoff. Historically, November has delivered double-digit Bitcoin gains, and all indicators suggest another explosive move is brewing. With liquidity flooding the system, targets of $130,000 to $145,000 or higher are now within reach. This isn't speculation. It's backed by data, market history, and on-chain signals. October was smoke. November is shaping up to be fire. The setup is nearly perfect, and the pressure is building. Bitcoin isn't just rebounding. It's preparing to detonate. Miss this move, and you'll be watching from the sidelines as history unfolds in real time.
Well, I mean, with any kind of investment group, whether it's Mag Sevens or it's Bitcoin, you have something of a maximalist, where you've got people who are just entrenched in their belief of what is happening in their world. And so, when gold people hear about Bitcoin, they think it's not tangible. I can't touch it. I don't know. I just don't understand it. And there's a little bit of resistance there, And so, and I believe that creates some attacks that Bitcoin's a Ponzi scheme. It's worth nothing. It has no underlying value on that side. And then from the other side, Bitcoiners just say, look, you're talking about a dumb rock that has some, industrial use, and people use it for jewelry, but it's not good money. Bitcoin's far better money than gold is, and so you have that argument. So, it's just an entrenchment of viewpoint, and really a lack of understanding about Bitcoin. And then Bitcoiners just, of course, being very aggressive. They're younger, typically. They're passionate, super passionate, and sometimes they can get out of bounds. I agree and admit, but it's a matter of opinion. I typically don't attack gold holders. Like I said, I own it myself, and we're both fighting for the same thing. That's the crazy part, is when you hear a gold bug talk about, or somebody who is very passionate about gold and has owned it for a long time, what do they talk about? They talk about deficits. They talk about fiat debasement. They talk about the need for hard assets, hard money. It's the same thing that we talk about. It's just it's digital in nature. It's really the same exact thing, except it's kind of it's a digital form, and it's an upgrade in the aspects that I talked about. Well, I mean, if you just take it on first principles that we're going to continue to have debasement of currency, continue to have expansion of not just the money supply but liquidity around the world. So, we're just so leveraged in the financial system across the world that we've got to continue with this leverage. We know that. So there's an expansion of liquidity. And so I'm watching that expansion of liquidity. It's continuing. I think it's going to continue into next year. You heard Powell say they're stopping QT. That means that at some point in the near future, that is going to flip to QE at some point. We don't know when, but I believe that we're just going to continue to see expansion of liquidity into next year. As far as Bitcoin's concerned, I fully expect Bitcoin to run to 150 to 180,000 toward the end of this year and into the beginning of next year, and probably into the 200 range. We typically see an exuberance and blow off top with Bitcoin that may be muted this time because we have so many institutions that are involved now. So the volatility may be dampened for this liquidity cycle. There used to be there has been what people talk about, the 4-year halving cycle of Bitcoin. And Bitcoin typically has a blow off top where it just gets way ahead of itself and over exuberance. And after the halving, and then it has a drawdown, 60, 70, 80% drawdown. I don't see that happening this time. I do see it having a drawdown after its blow off top, but I think it's going to be different because of the nature of it now moving into it's much more correlated to the expansion of liquidity, and not just money supply, but the expansion of liquidity around the world, around the whole world, not just the US either. And I think that's going to continue. The liquidity is going to continue to expand into next year. We will have a contraction at some point. How big, we don't know. But we also know that on the backside of that, central banks will print again, and it all starts all over again. Well, I wouldn't be surprised at all if the U.S. government did something around gold, but whether or not they revalue it, that's up for much debate. And I do not have enough knowledge around that idea to speak intelligently about it. But I could talk about the idea of Bitcoin being part of the U.S. government. I've met and talked with Cynthia Lummis, the senator from Wyoming, who created a bill called the Bitcoin Act. And that act is it's for the U.S. government to buy 1 million Bitcoin, which is 5% of the supply, 200,000 Bitcoin every year for 5 years, and put it on the balance sheet. But why would we want to do that? We would want to do that because as Bitcoin appreciates in value, meaning there's 2 reasons that Bitcoin appreciates in value. Number one, because of the expansion of liquidity and the expansion of the money supply, more dollars and more fiat currencies chasing after a finite asset. That's number one. Number two is it takes market share from other assets that those same dollars are chasing, whether that's from gold, or whether it's from stocks, whether it's from bonds or real estate. It draws from those as people realize this is a really easy asset to park my money in and make sure that I'm protected against that great devaluation. Okay, so as that happens and Bitcoin rises in value, then over the course of the next 5, 10, 12 years, the U.S. government would own an asset that would appreciate tremendously. So if you have 1 million Bitcoin and Bitcoin goes to $1 million, just think about how much the U.S. government could use to pay down their debt. Where the debt is at that point, 10 years from now, it's going to be over $50 trillion easily. It's going to it doubles actually about every 10 years. So it's going to be somewhere around 75 or 80 trillion dollars in 10 years. With Bitcoin appreciates against that. Well, the idea is that you could take some of that Bitcoin and put it on your balance sheet and strengthen your balance sheet, strengthen the Treasury's balance sheet so that they can still issue treasuries without the worry of they're just going to have to someday default altogether. Well, if they have Bitcoin in the balance sheet, it strengthens it. They could either pay down debt or they can use it just as a strong collateral against it.
Correct me if I'm wrong. Senator Lummis wants to sell the gold and buy Bitcoin. Do you think that is going to happen?
Well, I don't see that happening right away. But they have said they want it to be budget neutral. So whatever they do, they don't want to be, like you said, printing dollars to buy the Bitcoin. They want to make sure that they're not creating larger deficits from it. So where that money comes from, it's uncertain. But there's plenty of places they can find it at this point. You saw what Doge was doing. There's a lot of excess in our spending.
Bitcoin's legendary October streak has finally ended. After 7 consecutive years of green candles, October 2025 closed in the red, down just over 3%. While that might sound minor, it rattled traders and triggered nearly $19 billion in liquidations. Add in geopolitical tensions, Fed uncertainty, and a looming government shutdown, and the pressure was undeniable. Now all eyes are on November. Can Bitcoin reclaim its crown, or is this the start of a deeper correction? Analyst James Lavish believes this isn't panic time, it's perspective. He frames Bitcoin as a high-conviction hedge against global monetary manipulation, currency debasement, and a fragile financial system. In his view, this cycle isn't just another market swing. It's part of a larger shift in liquidity and value. Gold still plays its role, but Bitcoin moves faster, scales globally, and represents the future of wealth preservation. Historically, November has been Bitcoin's strongest month, averaging gains of over 40%. Whales are accumulating, funding rates remain positive, and ETF inflows could ignite the next big move. Some traders see $110,000 as a key entry point, while others wait for a confirmed breakout. One thing's certain, November 2025 won't be dull. A strong rebound could send Bitcoin charging toward $160,000, but if momentum stalls, support levels may soon be tested. Revenge or retreat, this November will define Bitcoin's next chapter.
For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.